Today is all about credit scores, the what, the why, and the how, so that you can make your hard-earned money go further. My name is Jason Butler. I'm that good-looking chap there in front of you. And I'm the head of financial education at Salary Finance. So my job is to help people understand and develop better relationship with money and better habits. We're not going to take more than 30 minutes of your time this morning. And there are other sessions at 1:30 and at 7:30 this evening today. So if you like what you see, please let your colleagues and friends know. Okay, now just a quick recap of what Salary Finance does. Salary Finance is an employee benefit that's available to you and your colleagues. And we're on a mission to get people out of debt and into saving. And we offer products including affordable loans, which are repaid through your salary, as well as the ability to save money directly from your wage, both in a savings account and in a government-sponsored savings account. And also, if your employer makes it available, to enable you to get advances of pay that you've already earned through before the end of the month. Now, just a little disclaimer here, that this session is not about financial advice. This is not regulated advice, and we can't give advice on your personal situation. But if you feel that you do need help, you can either get free money guidance or debt counselling help from the Citizens Advice Bureau, or Step Change, which is a charity, which is free of charge, or seek advice from a financial advisor or your local bank or anywhere else that provides regulated advice, because they can give you specific advice on your situation. Okay, now, so what we're going to cover today is, first of all, what credit scores are, and just make that absolutely clear what they involve. We're talking about why they matter, because you may not always be aware of how they can influence your choices. And then we're going to look at 10 simple ways to improve your score, some of which you may be aware of, some of which you're not aware of. And we'll have plenty of time for questions at the end. So if you think of a question as you go, very happy to try and, we've got plenty of time at the end to answer that. So we'll horse through the main 10 steps, and then we'll take questions. So I'm very happy to answer those. I'm not saying I've got all the answers, but I'll try and do my best. Okay, so let's have a look at what a credit score is. And if anyone knows what that actual calculation there is for, they're a better man than me, because I'm not quite sure what it is, but I'm sure the mathematicians amongst you would know. But essentially what a credit score is, it's a score that helps lenders to assess the risk of lending to you. And in many cases, it also influences how much they're going to charge you for credit. So if you have a higher score, obviously not only does it improve your chances of being approved for borrowing, whether that's a mortgage or overdraft or loans, but also there's a chance of you being charged at a much lower rate of interest. So you've probably seen lenders say APR of, let's say, 9.9 or 7.9 or 12.4, whatever the figure is. What that says is at least 50% of the people applying have to get that rate or lower. But it also means that there's 50% of people can actually be paying much more than that. So you might see a rate of 9.9, but you might be charged 18 or 19% if your credit score is very low. And in many cases, you may be actually refused credit. So the credit score is an important thing, and people are becoming more aware of it. So why does it matter? Well, as I said, it not only does it affect the ability for you to be able to borrow, and let's face it, at some stage in our life, everyone has to borrow some money. But it also, if you can't borrow money or you can't borrow it at a reasonable price, that can have a really detrimental impact on your financial well-being. And one of the reasons that Salary Finance started 4 or 5 years ago was because we wanted to make available unsecured lending at an affordable price for people by cutting out distribution costs and reducing the risk by having monies paid back directly from salary. And then since then, we've added more products. But even if you don't borrow money, your credit score can still be important, because if you are going to rent a property, often there will be a credit check done. And if it's an adverse credit check, you might not be able to rent the property. You might not be accepted for a job. When I came and started work here at Salary Finance, they did a credit check on me. Now, whether that would have stopped them giving me the job or not, I think they wanted to make sure that in my role, I had a squeaky clean credit history, which I did. So it might be, depending on the job you're doing, that might be an important issue if your credit score is low, particularly if you're in a position of trust or responsibility. And even things like mobile phone contracts, if you haven't got a good credit score, you might be refused that, particularly if it's an expensive phone that you're doing on some kind of 1 or 2 year contract. So it can matter to you even if you're not borrowing money. Okay, so what is a good score? Well, the problem is that there are actually 3 credit reference agencies, and they all use different scoring systems just to make it nice and complicated. And the 3 main reference agencies are Experian, Equifax, and TransUnion. So let's look, and I'll explain a bit later how you can get access to these scores and get your own score. And the company on the left are actually the ways that you get your access to the credit reference agency's scoring system. But if you look at the Experian score, you need 961 or more to have an excellent score. Whereas with Equifax, it's 466. Whereas with TransUnion, it's 628 or more. So you can see you really do need to get the score probably from all 3 of them if you want the fullest picture. But at the end of the day, the most important thing is even if your score is excellent, it can still fall back. And if your score is not so good, if it's fair or poor, then you can still improve it. And that's what this is all about. It's improving and maintaining a good score. So we'll cover that. Now, before we start, I want to ask a poll question, and believe me, I don't know who answers these, so please try and be as honest as possible. I just want to get a quick check of whether you've ever been refused any form of borrowing, no matter how far ago it was. It might have been when you were a student. So 1 is yes, several times. 2 is yes, a few times. 3 is yes, once. And 4 is no, you've never had a refusal, or you've never actually applied for credit. So I'm going to launch that poll now. So please answer that away. Poll is open. Please vote away. Please be as honest as possible. No one's going to know. It just gives me a rough idea of where we're at. There's no shame here at all. Great stuff. Okay, we're almost finished. Great stuff. Okay, so we've got here 3% of people several times, 15% a few times, 21% once, and 61% have either never been refused or never applied for credit. That doesn't mean to say that you can't be refused in the future. Now, what we don't know with that answer, so that's 60% of people have never been refused and 40% of people have. So it's quite normal to be refused. And here's the other thing, what we don't know from that question is how many of you are paying more than you need to because your score's not as high. So this is not just about being refused credit. This is about the cost of credit based on your score. So it's really worth spending some time on this. Okay. Someone's asking me a question there. Okay, so let's move on. So let's look at the 10 ways that you can improve and maintain your credit score. And we'll whiz through this so we can get to the questions. Okay, so the first thing here that you can do is use a credit card, but little and often. Now, if you use credit regularly and responsibly, that's an absolutely key foundational element to building a good credit score. And keeping your credit card active by spending a little bit each month and paying the bill off each month makes you appear really attractive to lenders, and that can help boost your score. So to give you an example, my daughter is at university. She doesn't need to borrow money. She's very, very disciplined, but she has a credit card and she has a small amount of expenses that goes on that every month, about £120, but it's fully paid off out of her monthly allowance. And she makes sure that she only puts a little bit of spending on it and it's paid every month, because that is building a credit history for her. So when she leaves university, although she has no borrowing, if she wants to get a mortgage or rent a property or any of the other things that she might need to do, she's got a bit of credit history. So using a credit card little and often, it shows that you are able to pay your way. Okay, so the second one is keeping your credit utilization low. Now, what this really means is that if you've got a credit card with an available amount that you can use of £1,000, if you regularly use £1,000 and don't pay it off, that's called 100% utilization. If you had £500 balance on a £1,000 facility, that's a 50% utilization. Basically, the lower that you utilize your card, and roughly about 30% or less is the right is the optimal figure, then the higher your score will be. So it's a quantum. So if you utilize it 50%, it will be a bit better than if you had it 90%, but not as good as 30%. So there's 2 things that you can do to improve that. You either have got to chip away at your credit card utilization, so overpay it and get it down, or you've got to increase the limit. Now, be very careful with increasing the limit, because if increasing the limit means you end up spending more money and you don't feel disciplined to do that, don't do that. But if you are very disciplined and the amount is controllable, then increasing the limit might be a quicker way, especially if you've got, say, a bonus coming or you're expecting a pay rise. But the ideal thing is to chip away at the balance and get it down. That's why paying minimum amounts on very large balances relative to your allowance is not a good thing. Okay. And in fact, you can see how much of your credit you've used by using one of the credit scoring companies. So, for instance, Salary Finance's sister company, ClearScore, which I'll give you details of later, they have a very useful facility for that. Now, number 3 is quite common, and it's fixing mistakes that are on your report. Now, credit reference companies aren't perfect, and contrary to what anyone thinks, is that they do get wrong data. It could be just a misspelling in your address. It could be mixing you up with someone else. It could be a loan that you've repaid that they've got down as still outstanding. And unless you fix the mistakes, they can go on for years. And that can mean that even though you're running your affairs very organized and you feel like you're paying everything on time and you've not got a problem, it can be holding your score back. So when you do come to apply for a mortgage or a loan, you may either be refused or pay much more than you need to. So fixing mistakes on your report is clearly a winner. And I'll give you the address that you can get access to your reports in a bit later in the webinar. But you do need to look at all 3 agencies, because one agency could have a problem. Now, this one about registering on the electoral roll, also known as the electoral register. Now, this can help improve the way that you're viewed by lenders, and it can also boost the chances of getting accepted for credit. And the reason for that is that it's because credit reference agencies are able to verify who you are, which can make you appeal much more stable to lenders. Now, a friend of mine has moved home every 2 or 3 years, and he's never even got round to registering on the electoral roll. Or when he did get the thing in from the polling organisation, he didn't bother sending it back because he thought he was leaving, he was going to be leaving soon. And so in about a 9-year period, he's never been registered on the electoral roll anywhere. So although he's got a squeaky clean credit record, he doesn't really appear to be very stable, and that can affect your credit score. So just make sure that you are on. There's 2 ways of registering. Obviously, you can register through the government website, which is shown there. And if you're not sure if you're registered or not, you can go to the Your Vote website, which is also shown there, Your Vote Matters, to see if you are registered. All you need to know is your local authority. Okay, now this one here, this number 5 is quite common. It's making multiple credit applications in a very short space of time. Now, every time you make a formal application for credit, and I'll come back to informal in a minute, a hard search, it's called a hard search, is carried out on your account, and it leaves a mark. It leaves a trail, if you will. And if you make too many of these applications in a short space of time, that could affect your score negatively as well. Because what it does is it makes lenders think that you're desperate for credit, or you're being either knocked back, or you're desperate to get lots of different loans from different people to pay off problems. And they're obviously very sensitive to that, because that might indicate that you're a very vulnerable customer. And the rules have changed over the last 5 or 6 years, where the regulators basically say to lenders, you have to be very sensitive to vulnerable people. And one indication of vulnerability is when someone is making lots of applications. So if you're rejected for credit once, try to resist the temptation to keep applying. Instead, perhaps wait some time until a few months have passed, 2 or 3 months, before you apply again. And before you do, check your credit report information is accurate to boost your chances of success. Now, the next thing you can do, which is sort of linked to this multiple applications, is you can use what's called an eligibility checker. Now, an eligibility checker is a way of sort of avoiding getting rejected for credit by doing a hard search, by doing what's called a soft search. So before you formally apply, what it essentially says is that it means a lender can see some very limited information about your credit history, but it won't affect your credit score, because only you can see what's called this soft search that's being carried out on your account. It's not a formal application. What you're really saying is, if I were to apply, would I be in the zone of people that you would kind of look at, subject to their final decision? And so what they're really saying is that the chances of you being accepted are 50%, 60%, 90%, or whatever. And it just gives you that idea that which products are suitable for you in terms of eligibility. So you don't have to make loads of applications before you apply, in theory that is. Now, all of the credit reference checking services have some kind of offer section, and certainly ClearScore has an offer section, which really sort of takes your score and shows you in percentage terms against different financial products what your percentage likelihood of eligibility will be. So 90% eligibility means you've got a 9 in 10 chance of being formally accepted for that borrowing. So that's really worth looking at. So just make sure you're getting a soft check for eligibility as opposed to a hard check. The seventh one is to get your name on some bills, some utility bills, if it isn't already. Now, things like mobile phone contract, your gas bill, they all count as a form of credit, and they're a great way to show lenders that you can pay your bills back reliably, as long as obviously you pay on time, and I'll come back to that. Now, if you don't have an account in your name, and this is quite common in house shares or where you're renting a room from someone, you're not going to get the boost to your credit score, even if you are contributing to the bills. And essentially the bill payer, whoever that is, whoever's on the bill, they're literally taking credit for you, and you're not going to get the benefit of that. So it might be worth considering putting 1 or 2 utility bills in your name, which could help boost your score. So it might be, if you're having a house share with 3 of you, someone takes the electricity bill, someone takes the gas bill, and someone takes the phone bill if you have a phone. But basically make sure that you're getting at least 1 in your name. The next thing is closely associated with that is make sure you pay your bills on time. How many times I've seen this where someone, the phone bill wasn't paid and someone else thought someone else was paid. Again, it happens in multiple occupation houses with students and professional people that are sharing homes, but it also happens in sort of nuclear families and normal households where, perhaps the husband or the wife or the partner thinks the other one is paying it, or you're responsible for paying it, but you haven't got around to putting it on direct debit or standing order, and things happen and life is busy and a bit of paper gets missed or the email sort of goes into junk, and it just gets missed. And this is where you can start getting problems. And if you're not paying your bills on time, it's going to show up on your credit record. It's going to reduce your score. So just automate everything. Make sure that everything you can is on some kind of direct debit or standing order. And if you are in a shared occupation house, think of using one of these consolidated bill services like Huddle. Huddle.uk.com. They have a thing where they bundle the bills and pay it for you, and they actually that serves as if you are paying a utility bill, so you still get the benefit of the credit reference, or the benefit to your score, but it's only one bill. Now sometimes that costs a bit more, sometimes a bit less, but if it means that you are keeping out of the red and in the black, that's probably possibly a good thing. It's certainly what my daughter at uni does with her 4 housemates, because otherwise I don't think anything would get paid. So that's well worth looking at. But again, make sure you automate everything that can be automated, and anything that's ad hoc, don't ignore it, whether it's an email or an envelope. Just have a focus of, remember, do it now. And even if you don't have to pay the bill for a week or 2, just go into internet banking or ring up your bank and set the payment for the day it's due to go out. Now, sadly, identity theft and fraud is actually a very small likelihood of you being affected by this, but it is on the rise, as you've probably seen in the news over the last few years. And what this can mean is that if you fall victim to identity theft, then potentially this could damage your score, because you're responsible for the credit actions of someone else. So you need to check your credit report regularly, and that will help you spot any financial fraud quickly. So if someone's trying to open credit in your name, you'll be able to see the early signs in the searches of your report. And that section lists all the hard credit searches carried out in your name. So if there are any searches that you don't recognize, it could be fraud, although it's always worth double checking with the named lender. And you should report any fraud that you see to actionfraud.police.uk. And if you think you're very vulnerable to identity fraud, perhaps you've had your personal information stolen, or credit card information or something like that, then you can sign up for a protective registration service from CFAS. And what this does is this means that anytime credit is applied for, there's an additional check and verification process that you go through. It doesn't affect your ability to get the credit. It just means there are enhanced security checks to make sure it is you. And you may have read that there's a recent scam of people receiving mobile phones delivered to their home that they never ordered from a mobile courier. And then very shortly after, another courier turns up and says, sorry, they've delivered that by mistake. And actually, it's just the fraudsters who've ordered the phone in your name to your address who want to get hold of the phone. And if at the end of the day that they've taken the phone and you've got the contract in your name that they've opened, that could cause a problem with your credit score. So watch out for those kind of frauds. And make sure that you have a good overall view of your finances. So as I said before, your credit score is calculated by a credit reference agency. There are 3 in the UK, Experian, Equifax and TransUnion. And they all hold slightly different information, which means that you're going to have 3 different credit scores, as I said. So it's worth checking in with all 3 companies to get a good overall view of your finances. So ClearScore shows your Equifax ClearScore and report completely for free. And Credit Karma will give you access to your TransUnion report, and Money Saving Expert will give you access to your Experian report. So this is well worth looking at. And ClearScore is definitely free. Credit Karma is free, but you've got to sign up to a trial, and Money Saving Expert is free. So there's no excuse for not getting your credit score, whether you get your credit report with it or not. So we really commend those to you. Definitely get those scores if you haven't already done so. Okay, so let's just summarize what we've really said here. We've said use a credit card little and often. Even if you don't like the idea of borrowing, it's not a problem as long as you use it to spend money you would already spend and have it fully repaid each month. Keep your credit utilization low, so 30% or less is ideal. But even if it's 40 or 50 or 60, that's still better than 90 or 100%. Fix mistakes on your credit report, because if you don't fix them, they're going to continue perpetuating. Get on the electoral roll if you're not already, and check if you are already on it. Avoid making multiple credit applications in a short space of time. And obviously one way to do that is also to perhaps use an eligibility checker service, so that you can see, that you don't get a hard mark against your credit report, and that you could actually see whether you would be eligible to take a loan or another financial product. Get your name on some bills if it isn't already, particularly important if you're in house share or student accommodation. Pay your bills on time by automating everything and making sure you pay stuff as soon as it comes in through the door or your email. Look out for fraud. It's unlikely but possible, and make sure you shred all your paperwork and don't leave stuff hanging around, and use proper strong passwords, etc. And make sure you have a good overall view of your finances by having both your credit score and your credit report. Just one thing you can do, I know that ClearScore does offer a free coaching service once you've gone through its signing up for its credit score, and that's just gives you helpful little hints that are specifically tailored for you to help you improve your score if you're struggling with that at the moment. And also, we, via our Learn website, part of the Financial Wellbeing Hub, we provide box set videos of how to learn to take control of your money, creating personal wealth. We've got checklists, we've got guides, we've got access to tools. It's not overwhelming. We've created that to be what we think will give you the highest impact and best benefit. So really check that out if you haven't already. That should be, every employer is different, but it should be via your Employee Benefit Hub, or if you're not sure where it is, ask your reward or HR people. Okay, now, have we got any questions? Okay, let's have a look here. Oh, yes, I've got one here. Okay, the first one is from Andy. At my company, we have a corporate Amex card, and people have often asked why it never shows up on my credit report. Could you explain why? Well, that's really simple, Andy. That's because the credit card is a company card, and it's got no bearing on the user's credit profile, because they aren't legally responsible for the agreement. So even if the company doesn't pay, it's got nothing to do with you. You're just a user of a card that is between your employer, the company, and the credit card company. So that's easy, that one. Okay, next one. My credit score is, this is Shannon. My credit score is currently quite poor. 748 out of 999. I understand the reason for this, as I was in quite a bit of debt many years ago. However, I have cleared all my debts in the past couple of years, but my score doesn't appear to be improving. It may go up a few points in a month and then it will drop again. Why is this? How do I improve my credit score over a shorter period of time? Well, there's no easy answer with this one, Shannon. I've got a couple of questions really for you, and I suppose the issue for me is, have you actually got copies of your credit report to spot mistakes? That's the most important thing. If you haven't got copies of your credit report, then that's not gonna help you, is it? Because you're not going to know if there's a problem. The other thing is about utilization on your cards and your overdrafts. Is it too high? So either increase the limit if you feel comfortable to do that, or reduce the balance to rectify it. It might be that your historic debt problems might just need a little bit more time to work through the system. So things like county court judgments that you've settled, or disputed bills that you've now come to an agreement and settled them, they can take up to 6 years to fall out of the picture. Or if indeed you've applied for too much credit, it does take a time to build it up. So I would say, I know it's frustrating, but just give yourself a bit of time to see if that's going to improve. And if it still doesn't improve after 3 or 4 months, then what I suggest you do is go to your Citizens Advice Bureau and speak to one of their money coaches or money advisors and with your credit report and talk it through with them, because they'll probably be able to help you. Okay, I've got another one here. Now, this is an interesting one. Right, I recently applied for interest-free credit for a nominal amount per month over 24 months. Myself and then my wife were both declined. This is the first time this has ever happened. We have paid off our mortgage in the last 2 years. The amount in total of the interest-free credit application covered around half of what we used to pay in 1 month for our mortgage repayments. We have no credit card debt, never had. We've always paid off any debts immediately or in line with the repayment structures, and our combined salaries easily would have covered the additional £30 per month. However, when I spoke with the bank in question why we were declined, they didn't have an answer. They just said that the credit agency said no specific reason. Can you help me understand why this might be? Well, again, that's very hard to answer without knowing more about you. But the question again is the same. Have you actually got, first of all, your credit scores from the different agencies and copy of your credit report to see if there are any mistakes? I mean, it may be that you're not on the electoral roll, or you've got a lodger. This is a very important one. You might have had a lodger who's defaulted on credit while living at your address, but you don't know, and they've redirected their post. And also, although having no mortgage will marginally reduce your score, it won't massively affect it, unless of course you don't have any active credit cards, even if you repay them every month, or loans or overdrafts. So I'm not sure, but I think you need to get you need to look at that and get your credit score. I mean, there are so many questions. I'll try and answer some there. Okay, let's have a look at this one. This is Felicity. Why do I sometimes get refused credit even though I've never been in debt? And again, that is just as I said to you before, because your footprint is not clear enough. It's an electoral roll, or you've never had credit, so they can't see if you're able to keep up payments, or it might be that there's something about your, where you moved around and they can't see where you've lived. So that could be that. Another one here, this is Stephen. I'm registered to vote on the electoral roll, but not on the public version to stop cold calling. Does that impact? No, not being on the public version doesn't in any way affect the fact you are on the electoral roll, because credit reference agencies have a heightened level. They can actually access the the electoral roll, the private one. Does credit card utilization in 50% matter? That's another one from Stephen. I've said to you there, 30% is ideal, 50% is okay, but it just will affect your score. Another one here, this is, who's this? Bryony. I keep a 0% credit card for larger purchases, holidays, and always pay it off before the 0% is over. I would then apply for a new 0% credit card when the previous one runs out and cancel my old one. Obviously, this isn't paying off the balance each month, although I will always pay the minimum. Would this help or hinder my credit score? Again, having a revolving facility like that, where you're not paying any interest but not paying the balance off, it will affect your balance, even if you're paying it all off, if you're using the vast majority of the balance there, Bryony. So you really want to make sure that if you are doing that, that either you increase that limit if you're comfortable to do so, or ideally reduce that balance outstanding. Last couple, I can't take any more. There's so many questions here. Does using ClearScore or Money Saving Expert to view your credit score negatively affect your score in any way? The answer is no. That's from Hannah. Thank you for that, Hannah. It doesn't affect you at all. I use Credit Karma for my credit score. This is from Diane. I get messages from them about raising my score, but not being in the electoral roll is affecting me. I'm an American and cannot vote. Is there a way to register without the ability to vote? There isn't, unfortunately. I'm sorry about that. That is just a quirk of the system. Sorry about that. Let's have a look here. I've just moved to the UK. The last one I can't cover anymore, but just moved to the UK 9 months ago. In order to have a credit score, I need to have at least 3 years of residence in the country. Where am I situated in this scenario? What can I do in order to buy a house with credit? Well, there are things called credit builder financial products. And if you do a Google search of credit builder credit cards, these are very small balances that enable people with not much history to gradually build some kind of, it might be £200, £300. So you can actually prove it's very low risk for the lender, where you can actually prove that you can handle it. That's all I've got time for. I'm very, very sorry for that. Before you will leave me, and thank you very much for your time on this, I just want to ask you a final question. How useful you found today? Reasonably, quite useful, really useful, excellent, oops, excellent. So I'm just going to put that poll question out, because this is really important. This is how I'm assessed as to whether I'm actually meeting your needs. So please, please answer away how useful you found today. That's very kind of you. Thank you. I'm just about to close that. That's brilliant. Okay. Great. Well, the vast majority of you, 88% of you, found it quite useful, really useful, or excellent. So thank you for that. So that remains, all that remains now for me to say thank you for joining me. If you've enjoyed what we've got here, there are lots of questions there. I am going to do a detailed response to all of those questions. There are about, there must be 80 questions. So I'm going to do a response and lump them together and share that with your employer, so that if I didn't get to your question, I will promise you I will answer it, and I will group the answers. If you've got colleagues who you think would benefit from this, we have a session at 1:30 today and another evening one to help those who need to do this out of work at 7:30 tonight. And our next webinar next month is on the art of negotiation. So if you've liked today, I really commend you to attend that session, because knowing how to negotiate is very, very important, and it's a skill that very few people are taught. Thank you for joining me. I'll see you next time.